Welcome back to Smart Stock Sam, the channel where we cut through the noise and follow the money. Today, we are diving into one of the most explosive pre-earnings setups in the market right now. We are talking about DataVault AI, ticker symbol DVLT. Yesterday, over 67 million shares traded hands in a single session. The price surged nearly 9%, and right now, as of May 15, 2026, this stock is sitting at a critical crossroads going into its Q1 earnings call. We are going to break down a 3,000% year-over-year revenue surge, a 48,000 GPU network being deployed across 100 American cities, a hidden dividend spinout that most retail investors are completely missing, and a short squeeze setup that could send this thing from 60 cents all the way to $1. So if you have been asking yourself whether the smart money already knows something you don't, stick around because I'm going to walk you through every layer of this trade. Now, let me be straightforward with you. When you see 67 million shares move through a stock that is sitting below $1, there is usually a very simple story behind it. Either the big players are getting out or they are loading up. And given that the price did not collapse, given that it actually climbed nearly 9% to close at 58 cents and 61/100ths of a cent, the data is telling us this was accumulation, institutional repositioning. The smart money is not moving in bulk like this without a reason, and that reason has everything to do with what is about to be revealed on today's earnings call. DataVault is not being priced as a tech curiosity anymore. It is being re-rated. It is transitioning from a speculative software concept to an industrial-scale AI infrastructure and tokenization powerhouse. And the price, still under 60 cents. Think about that. How often do you get a company at this stage of development, with this level of institutional interest building underneath it, still priced in penny stock territory? That disconnect between perception and reality is exactly what creates the setup worth studying. But what actually triggered this volume explosion? What sent 67 million shares moving in a single day? It comes down to three simultaneous developments that, when you see them together, start to paint a very clear picture. The first is the Clarity Act. The U.S. Senate Banking Committee just marked it up and passed it, and this is federal legislation that establishes a legal framework for digital assets in America. Why does that matter to DataVault? Because their entire tokenization business has been operating under regulatory uncertainty. The Clarity Act essentially hands them a green light. It is the legal permission slip that institutional investors have been waiting for before they could comfortably allocate into this space. Before this bill, big funds could not touch tokenization plays without massive legal risk. Now they can. The second pillar is the 48,000 GPU edge computing network being rolled out across 100 U.S. markets by the end of 2026. We are not talking about a handful of servers somewhere in a warehouse. We are talking about national infrastructure, hard physical assets. And the third piece, a $60 million registered direct offering that was just closed and led by global investment managers. Now, I know what you're thinking. A stock offering means dilution. Usually that's a red flag. But the market actually treated this one as a vote of confidence, and for good reason. Every dollar from that raise is going directly into the GPU fleet. When institutions lead an offering into a company that is building real hardware, that is not dilution, that is fuel. So let's talk about that hardware, because when you actually price out what 48,000 GPUs are worth, the numbers get genuinely staggering. Industry experts estimate the market value of a fleet that size at somewhere between $1.44 billion and $1.92 billion. Now look at the current market cap of DataVault. It is a fraction of that hardware value, a company whose physical assets alone could be worth nearly $2 billion, trading at a market cap that does not even come close to reflecting that. You want to know what the $60 million raise is doing? It is deploying those GPUs city by city. By converting from a software-only model to a physical infrastructure provider, DataVault is building a moat, a real, tangible, capital-intensive barrier to entry that smaller AI startups simply cannot replicate without billions of dollars they do not have. And think about what it actually means to have computing power distributed across 100 American cities rather than concentrated in a single data center. Edge computing at that scale means lower latency for enterprise clients, greater redundancy, and the ability to serve local markets with localized AI processing. This is not just a financial story. It is a structural advantage. The companies that build the physical rails for AI infrastructure in this decade are the ones that could collect tolls for the next 20 years. The question worth asking yourself is this: could Data Vault be building those rails right now, while the market is still pricing it like a speculative penny stock? That tension between what this company is building and what the market is willing to pay for it today, that is exactly where opportunity lives. But here is where the strategy gets genuinely sophisticated, because Data Vault is not just buying GPUs in isolation. They are surrounding that computing power with an entire security and liquidity ecosystem through acquisitions. Let me walk you through the corporate map. CyberCatch provides the AI-driven cybersecurity layer, because if you are hosting sensitive enterprise AI data, you absolutely must have quantum-resistant protection built in. King Mining Capital provides the physical asset backing. API Media handles the acoustic technology division, which we will come back to in a moment because that is where the hidden dividend play lives, and Silex, which brings us to the deal matrix. And this is where the dollar figures get serious. The CyberCatch acquisition is a 136.8 million Canadian dollar all-stock deal. That is cybersecurity baked directly into the GPU network at massive scale. Then you have Silex Holding Company, who has signed a binding term sheet committing $120 million in cash as a capital contribution, not a loan, a contribution to fund the 100-city rollout of the SanQtum platform. In return, Silex gets revenue participation rights. Think about how brilliant that structure is. Data Vault is scaling a billion-dollar infrastructure network without loading up its balance sheet with traditional debt. That is exactly the kind of capital discipline that turns a speculative play into a fundable business. And now, the part of this story that almost nobody is talking about, the Gold Vault program. Data Vault has partnered with King Mining Capital to lock in rights to 20,000 ounces of physical gold bullion through a $150 million plus program, and they are acquiring it at a 30% discount to the current market spot price. Let that sink in for a second. They are backing their digital tokenization platform with physical gold at a 30% discount to what that gold is worth on the open market. This creates a hard, intrinsic floor under the valuation. Even if the AI and tech side of the business takes longer than expected to scale, the gold backing is still sitting there on the balance sheet. This is not some vague promise. It is a tangible, hard asset safety net that gives the company real downside protection. In a world where AI valuations can evaporate overnight on a single bad news cycle, having physical gold reserves as a backstop is not a small thing. It is the kind of detail that separates a company that could survive a rough quarter from one that cannot. Now, I promised you a hidden dividend play, and here it is. The board of directors is currently evaluating a spin-out of the Acoustic Sciences division. The plan is to take the Wize and Adio technologies and create a brand new standalone public company called API Media, ticker ADIO. And here is why this matters to you as a current DVLT shareholder. You could potentially receive shares of this new spin-off company as a dividend. It is a direct value unlock. Right now, the acoustic technology is buried inside a larger conglomerate structure where it does not get its own valuation. Spin it out, let it trade independently, and suddenly, Data Vault becomes a pure-play AI and data monetization company, while the acoustic tech gets to thrive on its own terms. The options market has already noticed. There is unusual options activity concentrated at the $1 strike price, which tells you the market is pricing in a major repricing event. Could this spin-off announcement be the trigger? And more importantly, would you be positioned to receive those shares if it happens? Let's talk about the earnings setup right now because this chart is where the bull case either proves itself or falls apart. For Q1 of 2025, DataVault reported $629,000 in revenue. For this Q1 2026 report, consensus estimates are sitting at $20 million. That is a 3,079.65% year-over-year increase, 3,000% in 1 year. Now, on the earnings per share side, they are still projecting a loss of 8 cents, but pay attention to the direction of that curve. The losses are narrowing. The trajectory is bending toward profitability, and the company has maintained its full-year 2026 guidance of $200 million in revenue. If they deliver anywhere near $20 million today, the path to $200 million becomes very, very credible, and that is when the institutional re-rating really accelerates. But I want to be honest with you about the risks on this call, because the institutions will be asking hard questions. There are 3 key metrics we need to watch. First, sequential growth. Can management show a month-over-month trajectory that actually supports the $200 million full-year target? Second, cash burn. The $60 million raise sounds like a lot, but 48,000 GPUs are expensive to deploy at scale. We need to see how long that runway really is and whether another raise is coming. Third, NYIX integration. DataVault wants to use the established NASDAQ financial framework for token trading. If they can confirm technical readiness on that front, it means the tokenization revenue engine is ready to be switched on. Any weakness in these 3 areas could put pressure on the near-term price action. Now let's look at the technical chart, because this is where the short-term trade gets really interesting. The relative strength index is sitting at 63.23. That is strong momentum in buy territory, though we are approaching overbought levels. The MACD just printed a positive crossover, another bullish signal. The 5-day and 50-day moving averages are both flashing active buy signals. But there is one obstacle standing in the way: the 200-day moving average at 66.7 cents. That is the psychological ceiling. Until the stock breaks above and holds above that level, the long-term bears still have their grip on the trend. But here is the thing: the short sellers might be walking into a trap. Current short interest on DVLT is 81.3 million shares. That is over 13.6% of the float, and the off-exchange short volume ratio sits at a remarkably high 55.72%. The days to cover? Just 1.75. If a positive earnings surprise hits, or if that Adio spinoff gets a firm date announced, those shorts have less than 2 days to cover their positions into a low-float, high-demand environment. That is not a slow unwind. That is a snap. Could a positive surprise today trigger a gamma-style squeeze that blows right through the 67-cent resistance toward 80 cents, or even that $1 compliance target? The math says it is possible. The question is whether management delivers. And that $1 level is not just a psychological target. It is a legal deadline. DataVault is currently under a NASDAQ minimum bid requirement. They must get the stock price above $1 and sustain it to maintain their listing. The deadline is August 24, 2026. That gives management roughly 3 months to generate the news catalysts, the revenue beats, and the investor confidence necessary to push this stock back to $1. This is an imposed timeline. Management does not have the luxury of waiting and hoping. They are motivated, deeply motivated, to make things happen between now and late August. So here is the actual trade setup. You have 2 entry triggers to consider. Option A is a confirmed breakout above 60 cents on heavy volume. The stock has been dancing around that level, and a clean break with conviction is a go signal. Option B is a pullback to the support zone at 55.2 cents, which is held as a floor in recent sessions. Your first support below that is 55.2 cents, and your secondary support is 54.6 cents. If it breaks below 54 cents on high volume, the short-term bull case takes a hit and you need to reassess. On the upside, your resistance ladder is clear. First target is the 200-day moving average at 66.7 cents. Clear that, and the next stop is 80 cents, the short squeeze pressure zone. And the ultimate target, driven by the NASDAQ compliance clock, is $1. Before I give you the final verdict, I have to give you the standard reminder that I am legally required to share. Nothing in this video is financial advice. This content is for educational and informational purposes only. I am not a licensed financial advisor. DVLT AI is a micro-cap, penny-level stock with significant volatility and execution risk. Always conduct your own due diligence before making any investment decision. Penny stocks can move violently in both directions, and you should never invest more than you are prepared to lose entirely. Now, the final verdict. DataVault is one of the most compelling fundamental setups I have seen at this price level in a while. 3,000% revenue growth year over year. Legislative tailwinds from the Clarity Act. A $1 billion-plus GPU network being funded without traditional debt. A gold-backed tokenization platform. A hidden spin-off dividend. And a short squeeze that is coiled like a spring. The risks are real. Capital intensity, potential dilution, and that NASDAQ clock ticking loudly. But if DataVault delivers a positive earnings surprise today and gives investors a clear timeline on the Adio spinoff, those two catalysts together could be the ignition switch that sends this stock right through resistance and straight toward that compliance target. Here is the question I want to leave you with, and I genuinely want to hear what you think in the comments below. With a 3,000% revenue jump expected and a NASDAQ deadline forcing management's hand, do you think DVLT makes a run to $1 before August? Drop your price target in the comments. Let's see what the Smart Stock Sam community is thinking. If this breakdown added value to your research today, hit that like button. It genuinely helps this channel reach more people who are trying to make smarter decisions with their money. And if you are not subscribed yet, make sure you hit that subscribe button and ring the notification bell, because we cover pre-earnings setups like this one regularly, and you do not want to miss the next one. And if you really want to support the work we do here on Smart Stock Sam, YouTube has a super thanks feature right below this video. Even a small contribution goes a long way in keeping this kind of deep dive research coming your way. Until next time, manage your risk, trust the process, and I will see you in the next one.